Hello, Warriors. Let's have a great week. Dale Pinkertshared here with you from TradeGATEHub.com, powered by TradeView Markets, the broker where you could trade any instrument, no matter what you play. Guitars, cellos, CFDs, crypto, across the board. You could do all your trading in one-stop shopping with great support and very competitive spreads. So last week, the call of the week was being long gold and silver. Today in the room, I recommended taking partial profits in both of them. They were nice runs from last Monday when I recommended it. You know, you're good for about $1.80 in silver and pretty close to $80 in gold. So the big story this week, of course, is the ECB. And I do believe this is a bottom, and perhaps the ECB provides some pullback buying opportunities in the gold. Don't let go of your whole position, but you could book something, put them back on a pullback down here between 30 and 1810 is a 2-week off number, something I've taught for a while. So I'll just give you the off numbers so that you're prepared. That's a monthly chart, but here's your weekly, and you just count back. It's a simple method. 2 weeks, which the market's memory is about, this includes about 2 weeks worth of action. 2 weeks ago on the Friday, closed at 1810. So as long as we don't close back beneath 1810 by Friday, and I'd buy a pullback between 1830, 1810. This week, we are getting a bit of a sell-off in the gold from where we were, $10 off the highs, silver about 25 cents off the highs. Silver actually is still looking weaker if you just look at the weekly. And the weekly in silver is all the way down here at 2107. I'd look for something between 2130 and 21, maybe 2110 on a pullback, and then risking the low of the move, and then looking for potentially a move up towards 23 and a half, 24. This 24 area is going to be very important. Now let's get to the matter at hand. Lagarde talked hawkishly about when rates would go up. So you had this reaction in the euro. It's been my contention that the dollar was going to peak, especially if you saw action in the DXY back under the 102.35 level, which is where we're trading right now. So you really do need closes under this breakout level, and so far it's holding it. So perhaps we get a little pop on the ECB because maybe there's some disappointment with she's not as hawkish as she sounded today, or some other event, maybe yields. But I would now sell rallies up here. Looks like a nice little head and shoulders formation, and it measures back down, basically towards a 101 level. So I'd be looking to sell rallies, buy breaks. The headline says about 105, or I'd be looking to buy the euro for another wave to the upside. We're not going to really be able to declare a major bottom until we're trading back above 109. That's the old weekly wedge that we had to throw over on. So, we really need to get back over 109 to turn the weekly and monthly trend higher. But, when you look at this range in the euro, and I'll go out to my telescope with it right here, is that you have a huge range, right? You basically have a triangle, a rectangle. So let me just draw the big picture here for you. So let's go with a horizontal line. Let's call it right about here. And let's go with another horizontal line down here, which are the lows that we held. And I'm looking at a monthly, so we're actually getting a real nice monthly reversal in the euro. With this is going to be the last week of the month, so that could be a pretty important signal. But as I was saying, we really need to get back above this pivot to declare it. But if you're an uber bull in the euro and you wanted to make a technical case for a sharply higher euro, that would mean that we make a move back up to major resistance up here. which no one thinks can happen at this time. That'd be up here around the 124 level. So it's about a 20-cent range from high to low in here, maybe 22, and you tack that on, it gives you almost a 150 euro longer term. I think that that's a possibility as what's happening in our markets, whether we have a melt up because the Fed pauses or not. A weaker dollar would be welcomed by equities. It's one of the ways to remain somewhat restrictive and do QT would be to take some of the heat off emerging markets that have their debt denominated in dollars to have a weaker dollar. I don't think that anyone, at least in the initial stages, would not welcome a weaker dollar. I think the market would. I think the bond market would. So it's really in a lot of people's political and financial interests for the dollar to weaken. And this is a nice looking monthly candle. I just wanted to give you the big picture view and how you can make a case for almost a 150 euro, perhaps in the next couple of years. But I know you're not thinking about a couple of years, you're thinking about a couple of minutes. So I'd be looking at buying some pullbacks. What you need to do is just do some fib work from 103.5, call it 107. So pullback towards 105 would be a good initial entry. Maybe it could stretch to 4.5 or so. And now at least you have a reference for a stop loss reference would be the low of the move at 103.50. You know, on a pullback, it wouldn't be a terrible risk. I'm looking at, you know, cable looks okay too, not as strong as euro. And I've been pounding the table on euro pound for weeks. And we had this real nice higher low while the euro was making successive new lows, which was one of the reasons that told me I shouldn't be looking to short the euro, maybe let the market take it down. But euro pound's been telling me for a while that this divergence in euro pound, euro Swiss said euro bottom is coming. I think we're there. At least we have a point of reference for managing risk under the low of the move at 103.5, and I buy pullbacks. And I still like the long side of euro pound. So we're getting a little bit of a pullback in the S&Ps right now. Yen, I talked about last week. I thought that we'd have some confluence in the pullback to 127. And actually, you know, with a weak dollar, the yen's holding up okay. It hasn't even taken out last Thursday's low. So I'm neutral, and I really can't even rule out one more shot up towards 131 to take out these highs. That also would put pressure on the gold, just as its decline took the pressure off the bond market, took the pressure off the gold market, and they both rallied sharply last week, while the equity markets were under duress. Like the Aussie, I'd be looking to buy pullbacks in Aussie, possibly 69.5, maybe a shade under 70. Have a frame of reference low for a stop there as well. This will be part of the commodity rally, so look for a pullback in Aussie. It doesn't mean I'm trading it and getting short. And what I'm doing by talking about this today is I'm preparing myself possibly for after the ECB or any other time should we get a pullback. I'm anticipating one. Doesn't mean I'll get one, but if I do get one, I'm mentally prepped to execute when the market pulls back to the areas of interest to me, either based upon fibs or other technical factors. So I think that gold has, I told you the off number was 1810. I'd start at about 1830 down to 1810, wrong under the lows. And as you can tell, precious metals got a much better pop than copper. Copper, you know, I'm still not ready to buy it. Still think there's some more downside here. And the gold silver ratio, you know, this was a lot of momentum. So, you know, silver does look like the weaker chart to me. I'm until we take out this breakout, See this breakout that was also forecasted. I've been in the zone lately. It doesn't always happen. But look at the confluence of the moving averages as well as a breakout line coming in here at this 82.20 level. And you really can't call it a reversal. You could call it a pullback so far, but it's not a reversal until we close back under 82. Then I'd look for the gold silver ratio to come in quite dramatically. But, you know, we could always probe the highs again. You know, maybe silver gets hammered harder than gold and we have a pop. Maybe all it's going to be is some kind of failing rally too. You know, maybe we rally back to 86, 87, and then begin to reverse. But I'm long both of them because I'm not going to try and it's kind of neutral right here. I'm long-term, I'm bullish, both the metals. There are times when, you know, silver is going to lead and when it's going to lag. Like them both on pullbacks, and then let the market tell me which one's going to be the outperformer. And it'll probably tell me by which one I stay long or it gets stopped out in, or which one is having the better performance once the next leg up begins to occur. Mike pointed out today that oil was reversing. And, you know, this has been a pretty tough call since this initial very sharp break, but there's nothing impulsive about this. I don't know if it's distribution at a higher level, but you know, I can make a case, like I said last week, either way. I lean towards eventually having some breakdown under 94, where a lot of people are looking for, you know, 150, 200 oil. I think the pain trade, especially since the oil ETFs are one of the few remaining bastions of strength in the equity market, that there is still more corrective action in those. So I lean more towards the downside. I'd say getting back under 104 built that case. And let's talk about the sneakiest rally I've seen in quite some time. You know, Friday we were melting down. It's the end of the week, so normally you could expect some follow through into early the following week. And literally in the last hour, the S&P's recovered from, we were down 3% from 3820, 3800 to, you know, up here in literally an hour, and happened when people weren't looking. So pretty interesting. The S&Ps, what they're setting up here, don't get FOMO. But, you know, when I look at some of this intraday stuff here, if we start taking out 39, 66, 70, it's going to look pretty good for a move to 4,100. But you have to be open to the fact that we could pull back from this initial wave, and 3850 was a big number here. It was a big number here. And perhaps it comes into play again here, 3860, 3850, risking the lows. So if we get, you know, how I talk about all one market. So if we get a, you know, pop in the dollar, looking to buy sell dollar strength, buy euro weakness, buy Aussie weakness, buy gold weakness, and buy S&P weakness for potentially a bear market rally that is going to really squeeze people over 4,100 if we get there. So over 4,100, the shorts will bail in, I think, a fairly big way. That's where we failed from. And if you need a reminder of what the 4,100 level was, it's that megaphone formation. Pretty ugly month that we have back in this formation. So we'll see if we could generate, I think it's going to take a continuation move of weakness in the dollar and gold. So all one market, they're all going to go up. The only difference is going to be the durability of the rally, how long it lasts. And I think the durability in precious metals at this point, to me, is very long term. Whereas I could see the durability of even a short squeeze in the S&Ps back up towards 42, 4,300 could still be viewed as a bear market rally, you know, just correcting this big decline. The only other scenario I could come up with in S&Ps and NASDAQ would be, do you see this? This is a 1, this is a 2, and then we get one more flush for a 3 drive. But I think it's all going to happen around the dollar popping and a pullback in the commodity markets, and possibly being led by crude. But you have the numbers of things I'm looking at. Something else I want to point out that builds the case for a bear market rally. You know, even the bears are looking for a rally. The bulls are looking for a rally, and in that, you know, evolves into a melt up. So both are looking for rallies. Last Friday, when the S&Ps were making new lows here, and the NASDAQ was making new lows here, although diverging, in our main trading room, chat room, I was posting all last week how the IWM was showing relative strength when the rest of the markets were declining. On Friday, it did not make a new low like the rest of the indexes, and a group that I've been favoring for a while. Also, the semis didn't. This is when I first started talking about semis. Had a nice little rally, then new lows, but divergence, and this time a higher low with Russell. So if there is going to be a rally in equities, these are the groups that I favor. And perhaps the Russell has a shot to move back up towards a 250, 260 level, which when you look at it on a daily, would still just be, you know, another bear market rally back to here, 250, maybe 260. If the bulls want to get a party going, they're going to need to close over this trend line at 265. And some of the super bulls I know are most bullish, the Russell. Dave H. Contrarian comes to mind on that one. So we have a great interview. We're going to be talking about one good way to reduce leverage on Thursday is to trade smaller contracts. So we're going to have Frank with us, and we're going to talk about smaller markets so that you can let your trades breathe. And my co-anchor, Mike, I'll be with him tomorrow. And in fact, Mike will be on in an hour and 14 minutes. It's really our hope that we're helping you learn how to make decisions and giving you the whys, and certain people that we follow or I interview, trying to give you good sources so you make good decisions. So good hunting the rest of the day. Remember, don't just count your pips, count your blessings. And I'll see everyone tomorrow with Mike, and don't forget to tune in for Mike. I'm sure he had lots of ideas here in the chat room. I'm also interested that if I get a pullback, like a 90 handle pullback in the S&Ps, what would be his candidates for getting long into this type of maybe bear market rally. So thank you, everyone. Good hunting, and definitely come in and say hello to us and bring your best technical work and share it here on TradeGATEHub.com. If you're new in the markets, I recommend that you don't go live and set up a demo and get used to just the functionality of MT4 or 5. And then perhaps down the road, you move to some of these smaller markets, smaller sized contracts, so that at least you know what it's like to have a small bet on the line. Because I don't care if it's $1,000 or $10, just having some money at risk prepares you for the emotional swings you have with your financial swings. That's it. Good luck. And I'll see everyone tomorrow with Mike. Adios.